Guys, how to get sniper entries in the market. I'm literally going to give you guys my exact rules to enter, what time frames I use to enter, so you guys will literally you'll be able to get the same exact sniper entries that I get. So let's get right into it. So the main time frames that I use, the main ones, these are not just the only ones we use, but these are the main ones, are going to be M1 time frame, the M5 time frame, and the M15 time frame. I'm going to give you guys 3 examples of 3 different trades that I took, and I called them the signal group so you guys can see exactly me breaking down in live examples what I'm teaching you. So let's go into the first example. So let's just say we have an H1 supply or demand, right? I'm just going to work with supply because that's the example that we're working with, but it would be the same rules would apply if it was an area of demand. So let's just say we have H1 supply, right? And price, this is the H1 supply from a previous day. We're waiting for price to touch this area and give us an entry confirmation to enter. We don't want to just enter off of a higher time frame supply or a supply created in a previous session unless we have an entry confirmation. So what we would want is for price to touch this area supply on M1 or M5 and create a new area of supply, meaning that we get some volume creating a new area supply on a lower time frame after we touch the higher time frame supply, validating this area, something like this, and then we would enter right here off the new area of supply created off of this area right here. So it would look like this. We would enter off of the new area supply created on a lower time frame off of the higher time frame supply. That's our entry confirmation, like for example on H1. And I'm gonna give you guys the same exact example. Now that's saying if price is pulling into an area of supply or demand from a previous session or a previous day. Example 2 would be something like this. Let's just say New York opens up, right? New York opens, and then when New York opens, we create the area of supply, meaning that New York needs to pull back into this area. Pretty much, this is a rough example, meaning that pretty much New York would pull back into this area created in the same session and continue the volume from that area. Now, the only way we're going to take a trade off of an area, you see how I place sell limits and buy limits without waiting for an entry confirmation? The only way I do this is if the area supply or demand is created in the session, meaning I'm trading New York and the area supply or demand is created in the session and more than one time frame aligns, meaning if it's an M1 area supply, that's fine. I'll place my sell limit, no entry confirmation needed. Or if it's an M5 area of supply, if it aligns with M1, meaning if M5 is right here, the supply is right here, and M1 would be like a little bit higher, these 2 time frames align, I place my sell limit, no problem. Same thing as again with M15. If M15 is here, M5 is a little bit higher. Like just time frames align and it's created in the session, that's enough confirmation for me to place my sell limit or buy limit in that area of supply or demand that was created in the session. Now, if it wasn't created in the session, we needed for price to touch that area and create a new area of supply or demand off of that higher time frame zone on a lower time frame. I know I probably lost you guys right here, so let's go right into it and give you guys live examples. So let me just delete this. We'll do with this. So for example, let's go with the first one I was telling you guys. So on H1, right? Let's go to, I have this example marked here on March 20th. So these are all trades that I actually took in the market and called in the signal group. I'm not just giving you perfect examples. Like I'm literally teaching you what I use and I'm showing you that it works. So March 20th, let's go to March 20th right here. Okay. So this right here. So pretty much, and I'll go to M5 because I know if I go to M1, it's too far back and it's not gonna let me go. So on M5, okay, perfect. So actually, let me mark it back on H1. So on H1, we have this area supply, right? That gave us this huge push to the downside. This previous contrary candle is our area of supply. We're not gonna just enter off this area. Sorry, excuse me. We're not gonna just enter off this area without an entry confirmation. So what we do is this. Notice how it's pre-New York and we're pretty much an hour away from our session. I trade from New York from 9. I sit down at 8:30 all the way to 11. And I sit down at 8:30 to do my analysis. 9 is when I take a trade. Now, this is what I'm working with right here. We see that price is approaching this H1 supply, but we're not going to just enter like crazy people. We want to be snipers and we want to be precise. So if we go to M5 and we just fast forward, we'll see how we get our entry confirmation off of this zone. So we just fast forward. Okay, perfect, right here. So again, I'm not going to M1 because it's too far back and it's not going to let me go. But notice how on M5 and on M1, it aligns as well. So on M1, we have an area supply a little bit higher here and M5 right here. So notice how we touch this higher time frame supply, H1. And then we create this new area of supply right here on M5. This previous contrary candle for this push, you can see how we pretty much take out this low. It's breaking structure on a lower time frame. So pretty much you can see it doesn't even need to break structure sometimes. Like you just need volume to come in off of that area on a lower time frame, because this isn't pretty much breaking structure. We would need price to break an area down here, but you can see the volume coming in, just validating the zone. It's just like a little confirmation that you want. You don't want to just enter off of these zones and place your sell limit here, like I told you, because price could just blow past it and it would save you a loss if you just wait for this. So the exact sell limit I sent was right here at 270. And the reason I do this is because this. I'll explain. I'm giving you guys some sauce right here, so pay attention and take notes. Now, when the M1 and M5 time frame align, you're gonna place your buy limit and sell limit at the lowest point, because you don't know if it's gonna react off the M5 or the M1. And I'll show you exactly what I mean in the next example, because I can't go to M1 here. But this was the trade right here, like that. M5, M1 time supply created after touching at H1 supply. We got our entry confirmation, and we just let it fast forward, and you can see price does this thing. We hit take profit. Now, let me give you guys another example. Let me actually go to today's trade that I called this as well in the Signal group. So there's no BSing out here. Like all these trades I actually called in the Signal group and I take myself. So it's not like I'm giving you perfect examples of trades. So okay, so today's trade, for example. Let's go to M5. Now check this out. You're gonna see what I'm saying when M5 and M1 time frame align. Now, notice how, for example, we have this area of supply right here that was created. I'm not going to do a top-down analysis on the trade, but overall, if like I explained exactly why I took this trade before, but I'm not going to do a top-down analysis to not make this video longer. But we're looking for sells, right? M5 creates this on M5, London creates this area of supply. Pre-New York pulls back into it. You can see that price pushes down to the downside. Notice how perfect this is right here, right? Literally the same thing I told you. Price touches this area. As you can see how price creates this new. We get our entry confirmation on M5 right here. That would have been a perfect entry. And if I was to break this down a little bit more, if I go to M1, there's probably an M1 supply right here as well. Yeah, exactly. The M1 would be right here. So you can see how pretty much the M1 and M5 align themselves right here. This was literally the sniper entry right here. Or you could enter right here with the entry confirmation right here. So you see how perfect this is right here? I didn't take this trade. I took the trade right here, and I'll explain to you why I took it here. I mean, this obviously I didn't take because I don't trade pre-New York, but this would have been the fire entry right here. Notice how price touches this area. We create this new area of supply on M1 after we touch it, validating this. And then this is literally a sniper entry. Like there's no drawdown. You can see how we just tap this area and then the volume comes into the downside. Now, keeping this in mind, when I come to trade now at 9 o'clock in the morning, which is New York, and we see this, let me just replay this so we don't have to go so back. So we see this, right? We're working with this right here. Let me actually go a little bit further so you guys could actually see what I actually saw. So we're working with this, right? And we're anticipating price to go down. We have an area of supply on H1 that was a little bit higher here, but the reason why I didn't take that trade is because of this. We have this area on M5 right here. And then on M1, let's break this down even more and I can show you guys what price did. So we have this area of supply right here to take possible sells from, but we need price to touch and give us an entry confirmation. But on a higher time frame, we had an area of supply up here. That was the more likely area that I was looking to take sells from, but I'll explain to you exactly why I took the sells and why we didn't wait for price to go back up there. So okay, so right here. Okay, so literally a little bit further. I'm sorry, let me fast forward a little bit more. Okay, perfect. So right here, exactly right here. Notice how these price points are so precise sometimes that price won't touch them by like half a pip or a pip. But as soon as price gave me this volume right here coming off of this area, I marked this M1 supply right here, right? M1 supply. And then this is what I was telling you guys on M5. Notice how it aligns right here. It's just half a pip or a pip beneath. So M5 supply, M1 supply right here. And then I told myself, if we have this area right here, we need to take out these lows. Like this is no valid area of demand. This is no valid area of demand formed here. How I told you guys, we're anticipating price to go down. But when price did this here and created this M5 supply, M1 supply, and then we have a supply right here, that was enough confirmation for me to just send a trade right here at 420 with my stop loss like this. And the stop loss covered, the point of the stop loss was to cover this M5, M1 supply. And even if it pulled back into this area here, it still gave me enough range to cover. Now the trade ended up playing out for a 1 to 4. Notice how precise these entries are. You can see how price pretty much just pulls back into this area. How I told you guys in this example, price used the M1 one, but in the next example, I'm gonna show you guys price use the M5, but you don't know which one price is gonna use. So you always place your sell limit or buy limit at the closest one, meaning the M5 right beneath the M1, because if I was to place my sell limit right here on the M1 and price would have taken the M5, my sell limit wouldn't activate by like half a pip. Just trying to be so precise. The point is just to have your stop loss cover the range, and that is enough. Now, let's go over one more trade. Okay, so let's go over one more trade. Now, let me delete this. Let's go over May 3rd, which is a buy. So let's do this. May 3rd. Okay, perfect. Right here. Okay, now, same thing that I tell you guys. Now, let me just fast forward so we could. Okay, so check this out. Right here. Okay, so on this day, let me actually go a little bit more back. Right here. Right there, perfect. So check this out, guys. Notice how pretty much we're stuck in this range. It looks ugly, but I'm gonna break this down for you guys. On same thing on this day, I'm not gonna do a top-down analysis because it would make the video very long. But on this day, we're looking for a bullish move, right? We're anticipating a bullish move, and then pretty much we're working with this. Notice this area of demand right here. This area of demand right here, right? Area of demand that was created right before in Frankfurt, right before London opened up, and then you can see that price pulled back into this area. We literally tapped this area, and we're stuck in this range. Now the interesting thing is this: we had news at 10 o'clock, and the news created this area of demand right here. So notice how the M5, notice this candle when it closed. This candle closed right here, and then as soon as it closed, we broke all these highs, creating this area M5 demand. And then on M1, it aligns right here. On M1, it's this area of demand right here. This previous contrary candle before the push right here. And then we enter literally right here. Again, I enter off of the closest one because you don't know which one price is going to react off of. Meaning, for example, we enter off of this M5 demand right here and not the M1 because it's so you don't know which one price is going to react off of. Notice how last trade price pulled back into the M1 area of supplier demand. But in this trade, notice how price does not. It literally uses the M5. So check this out right here. And then notice how precise these entries are. I'm telling you, they're literally sniper entries. Like they either hit or they don't. But you can see how precise they are. Like, sorry, excuse me. I don't like to say trading with the banks, but it's literally trading with the banks because if we just fast forward, notice how price enters at this exact pip. And then you can see that that's where the volume comes in from. Sorry, excuse me. Let me fast forward. Okay, right there. The news drove. Okay, so the news, right there, literally. Notice how news, the volume from news in the afternoon came. All the volume was coming off this M5 supply. But notice how precise these areas are. You guys see what I'm saying? That you have to place your buy limit or your sell limit. If it's an M1 and M5 supply area of supply, you need to place at the M5 if they're in confluence because it might not pull back to the M1. Notice how here, if I'm telling you guys, if we would have placed at the M1, it wouldn't have activated by like a quarter of a pip, half a pip. And you can see how price uses the M5 one here. So I hope this video is useful for you guys. Leave a like, comment, subscribe, and I'll see you guys in the next one.